Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Izul Hafiz bin Azhar. My metric number is 280168. I will present you about the introduction and conclusion of this group assignment. EPF, a social security plan, aims to provide financial security and stability to employees post-retirement. Governed by statutory bodies, EPF focus on improving member safety and providing exceptional service. It serves as a long-term savings tool, assisting with retirement, and various financial needs. The EPF system provides retirement benefit, disability pensions, life insurance, and family pension for employees and their family. It offers nice customer charters, including early withdrawal for COVID-19 affected individuals. However, the sum didn't deny the initiative withdrawal, questioning its benefit for the country's economy.
Assalamualaikum warahmatullahi wabarakatuh and hi, my name is Nura Arifah binti Ismail, number matric 280552. I will continue with our findings for the pros or the advantages of the earlier withdrawal of the EPF. The first advantage is addressing immediate financial needs. Employee can make an early withdrawal from their pension fund in the event of a sudden need for a financial help or other unplanned event. This was because some of them could not work and could not get work during the pandemic, resulting in their income falling. The EPF is available to employee in some pension plans such as iLestari, iSina and iCitra. It can help people meet their monetary obligations such as for paying necessary living things, medical costs or debt repayment. For example, during COVID-19 pandemic, many people decide to withdraw their money from the EPF to cover their vital need. This allowed them to lessen the pandemic effect on their financial and keep up the standard of the life that was disturbed by the pandemic. The second advantage is stimulating economic growth. Early withdrawal of EPF fund may inject liquidity into the economy, showing that everyone will be given access to their retirement account and they can use the money for the various purpose. For example, Government of Malaysia allow EPF member to withdraw up to 500 per month from their account for a period of 12 months during the COVID-19. When people take money out of their EPF account, they typically spend it on their expense. The early withdrawal of the EPF can infuse the liquidity into the economy, which increase consumer spending and contribute to the economy expansion. People daily purchase of good create demand, which help business to stay profitable and keep hiring new workers. This is a good to help company and economy to grow healthier. The third advantage is facilitating home ownership, providing a source of money for a down payment and partial payment toward the purchase of property, which can help to assist people on their journey to become homeowner. This has been done during and before the COVID-19. Malaysia cope with the economic impact of the pandemic and support the growth of the real estate market. According to Muhammad Jaafar, it's likely that young member will use the fund for down payment while elder member will use the fund to settle the housing loan before they retiring. Additionally, using the EPF funds for down payment can help addressing high loan rejection among the Malaysian and reducing the amount they need to borrow from the bank and increase their chance of loan approval. So that's all about the advantage of the earlier withdrawal EPF. Thanks for me.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Atira Badrul Manajib. My metric number is 281455. So I will be presenting about the cons of early EPF withdrawal. So first, receive a lesser amount of dividend payment. This is because the return on the individual investment in the EPF account are lower because of the early withdrawal, which makes the fund smaller. The individual will not optimizing the growth potential available in their retirement fund as the fund become lesser because of the early withdrawal. So the individual will have fewer funds to rely on and may struggle to fulfill financial requirements and aims after retirement. So, according to the news article, some of the EPF contributors can only spend 68 cents daily upon their retirement if the contributors age reach to 75 to 78 years old. So the second one is take a considerable amount of time to repay the entire advancement of the withdrawal. So the individual which and their other financial obligation will make their repayment of the full advancement may take an intensive period of time as the total amount that they take are not small. And the amount that they borrow and the repayment term and the individual financial standing all influence the amount of time taken to repay all of the withdrawal. So according to a news article, approximately 6.1 million nations seek support to increase their EPF funds after making withdrawals or during the outbreak. So the last one, individuals with limited financial knowledge are at risk. For an individual that have limited knowledge on financial, then navigating the complexity of EPF and making informed decision may be challenging. This will make them unaware of the consequences of taking out advancements such as repayment condition, charges for interest, and the possible impact. This could result in mistake or disparity in contribution, which affect the entire retirement saving of the individual. According to a news article, 6.67 million members have retirement funds of no more than 10,000 ringgit in their account, with 3.6 million families having less than 1,000 ringgit in their FPF accounts. That's all from me. Thank you.
Hi and Assalamualaikum. My name is Nur Amirah Keti BMT Abdullah. My metric number is 20407. Okay, I will discuss about the recognition and measurement. The EPF is recognized as a liability in the financial statement of public sector entity and reflect the obligation of entity to its employee for their contribution, and this will disburse as a retirement benefit in the future. The regulation is follow guideline that is established by Malaysian Public Sector Accounting Standard (MPSAS). MPSAS provide guideline on when and how to acknowledge the EPF liability in the financial statement. EPF liability is measured by considering the contribution made by employee and employer, which are typically a fixed percentage of the employee's salary. Next, I will continue with the accounting treatment of EPF. First of all, the accounting treatment for EPF contribution involve deducting employee contribution from their salary and recording them as deduction from salary expense, and then adding the deducted amount to the EPF liability. However, the employer contribution are recognized as expenses and adding to the EPF liability. The lastly is EPF contribution are invested to generate any income or earn interest, and any interest or investment income that earned will recognize as revenue and added to EPF liability to reflect the increased balance.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Aisha, metric number 281528. I will continue the discussion on the impact on employee benefits expense calculation. Employee benefits are essential for bringing in and keeping talent inside a company. The EPF is a common program among the various benefits offered by employers that aims to give workers financial security. Both employers and employees are impacted by the EPF's significant influence on the cost calculation for employee benefits. The EPF mandates that a set portion of each employee's salary be paid into the fund by both employers and employees. For example, an employee making 3,000 ringgit per month will pay 270 ringgit per month into the EPF if the contribution rate is 9%. This contribution must be considered as a component of the total compensation package in order to determine the employee benefits expense. In short, when calculating the true cost of offering benefits to their workforce, employers must take into account both employee and employer contributions. The The second discussion is on the disclosure and transparency requirements in financial statements. EPF contributions made by both employees and employers should be fully disclosed in financial statements in a clear and comprehensive manner. These disclosures aid stakeholders in comprehending the amount set aside for employee benefits as well as the organization's financial impact. Specific line items that show the total EPF contributions made by employees and employers separately should be included in a company's financial statement. Stakeholders must be able to comprehend the financial impact of employee benefits on an organization in order to comply with EPF disclosure and transparency requirements in the financial statements. Organizations can increase transparency and give stakeholders the ability to evaluate the financial stability and sustainability of the EPF scheme by disclosing EPF contributions, investment, liabilities, and pertinent information in financial statements. It is easier to make informed decisions when reporting standards are followed because they guarantee consistency and comparability across organizations. Strong EPF disclosures procedures ultimately support credibility, trust, and efficient employee benefit administration.
So, our team has concluded that actually early withdrawal from the employees provided fund can provide financial relief, stimulate economic growth, and facilitate ownership. However, they also have drawbacks such as reduced dividend payment, reduced saving, and time-consuming repayment. Limited financial knowledge and understanding EPF rules are crucial for informed decision. To protect retirement saving, individuals should consider the implication, seek professional advice, and improve financial literacy. So, that's all for me and for my group. Thank you very much.